Hi everyone, today let's talk about 3 investing themes to watch for 2024 according to iShares. Then we'll cover Boeing for the single stock for this episode, as they did have a flight with a panel blowout. Then we'll look at all of the usual metrics and calendars going into next week, as well as the charts and my results for the week and my thoughts going into next week. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open, as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So iShares put out some information about investing in 2024, and let's see what their themes are. Primarily focused on artificial intelligence continuing to drive markets higher. That obviously drove markets higher a lot in 2023. And they do expect that to continue in 24. But the main caveat here is that they're saying AI will expand beyond the Magnificent Seven. Those were the main beneficiaries this year, last year, and going forward, they think it's going to encompass much more things, specifically the healthcare sector. They're also expecting more deglobalization. I don't really agree with this. I think it's more of a de-China trend, moving manufacturing out of China and into countries like Mexico, as well as India. I think we just want to prop up the Mexican economy, and I think that is partially to stem the issues that we're seeing at the southern border as well. If their economy is stronger, perhaps we'll see less of a flow from their country into the United States. They also mention here, interest rate cuts are expected to show up in 2024, but even if that happens, they still mention there is a possibility of a recession. I do agree with this. I think the economy is going to slow a little bit more than expectations, and I think we're optimistic currently, and that's part of why we're seeing a pretty significant sell-off early this year. And another point that they mention here is that there is a lot of cash on the sidelines, $6 trillion in cash currently waiting to enter the markets at the right time. And once we see these trends, according to iShares, take off, that money is going to surge into markets and potentially push them up higher. So right now, artificial intelligence continues to drive markets. And they mentioned that in 2023, we saw an average return of the Magnificent Seven of 108%, and the AI index was at 32%, but they're expecting AI to continue to catalyze markets and expand beyond just Magnificent Seven. And primarily their focus for this article is healthcare. We have a large population in the 65 plus age bracket, even more so in that bracket than the 15 and under category, and they say that is for the very first time in our history. So healthcare expected to be a space that continues to expand, and AI should accelerate that expansion. Definitely interesting. They also mentioned the other applications. And to put some numbers on that, healthcare market is valued at about $9 billion in 2022. And it's expected to reach $188 billion by 2031, which is obviously a massive growth. We are a couple of years into that, but that would be a 40% annualized growth, which would be massive if we could even get half of that. In terms of applications within healthcare, you can see them all listed here. Drug development, diagnosis. I think that's probably the most interesting one. I've seen studies where AI is able to identify anomalies in some of the medical tests, even better than the most seasoned medical providers. So I do think there's definitely opportunity there. Moving over to deglobalization, you can see we've kind of been stagnant in terms of globalization. This chart is supposed to reflect the amount of trade openness on an index. I'm not sure how they measure that exactly, but for the last 9 years or so, we've been pretty flat according to them. Again, I don't really think that we're deglobalizing. I think we're just moving into some markets that are a little bit more friendly to the United States, to include Mexico, Canada, India, basically anywhere that is not China. Moving over to Boeing, they had 170 737 MAX 9s grounded after a panel blew out of an Alaska Airlines flight. If you've been following Boeing for a while, you know that their 737 MAXs have had some issues, and here's a picture of it. You can see a massive blowout of the panel. Definitely not great. Another grounding for this airline could be pretty important and impactful to Boeing. They had been recovering pretty well, and we'll definitely take a look at the charts later, but here is another news article on the 737 MAX that is not positive for Boeing. In terms of Boeing as a company, they do have a ton of back orders. They just cannot produce airlines fast enough. I do think once they speed up their production, they can absolutely make money and be a good investment, but they just haven't been able to do it. and they aren't maintaining the same level of safety standards that they had in the past, especially with the 737 MAX. Moving over to the sentiment metrics, fear and greed hasn't really moved. It's been in this 74-75 range for a while. Even with the pullback, these are still all in extreme greed. We're still at the top of markets, so there is a long way to fall if we do see these swing back into fear or extreme fear. Even the put-call ratio still in greed. Market volatility has been at neutral for a while. We did see a rejection from that 50-day moving average. And then here, safe haven demand still in greed. Junk bond demand still in greed. So greed almost all the way across the board, and extreme greed in the major metrics. Moving over to sentiment, we actually did tick up here slightly. 48.6% see bullishness over the next 6 months, up from 46.3%. And then we had the peak for the last 1 year at 52.9, and that happened on the December 20th week. So still very, very high on this metric. Lots of bulls in the market, very few bears at 23.5%. And they did shrink a little bit from last week to this week. So contrarian metric still says there is downside to come. Moving over to seasonality, you can see we just had that first week of trading. So we're now moving into days 5 through 9. And you can see the Russell as well as the S&P 500 are typically negative during this period from the first trading day of January up until this period. And then we start to see a little bit of a perk up in the S&Ps as well as the Russell 2000. You can see the red here, the red dotted line is the Russell 2000, expecting that to trend upwards all the way up until the 18th trading day of the week, starting on the 18th trading day of the month, starting on the 8th trading day. So that would give you about a 10-day rally. Historically, again, this doesn't guarantee anything, and obviously we've seen a lot more weakness than this chart projects in the first 4 trading days. So keep that in mind. We've seen a lot more weakness than we do historically in January, but typically the end of the month is bullish for the NASDAQ and the Russell. And then we see the Dow, the S&Ps, and the Russell 1000 basically flat on the month. Moving over to the calendar, we have Monday. That is the end of the first 5 trading days of the year, which have all been pretty negative and acts as an early warning here for the rest of the year. And then looking at Tuesday, Wednesday, typically bullish, and the NASDAQ also typically bullish on Thursday as well. It's also worth mentioning the week after next week is your options expiration day, and we do tend to see volatility either on the Wednesday or the Thursday prior to that week. And I would expect to see it on Thursday with CPI. That could be a catalyst there for some weakness. And then we do have PPI on Friday. And then lastly, for seasonality, I do want to point out the fact that they are projecting bullishness for the next year. Despite the fact that it is an election year, we saw a very strong rally, expected to have that weaker January, and then rally basically for the rest of the year. Moving over to earnings just for a moment. Don't forget, earnings do start at the end of next week. So we have the big banks leading it off, as well as United Health and Delta Airlines, as well as BlackRock. A couple of interesting ones there on Friday, the 12th. Otherwise, moving over to the economic calendar, not much for Monday. Eurozone unemployment rate. Looking at Tuesday, they have the unemployment rate again, which is interesting. But in terms of the US, nothing major for Tuesday. Looking at Friday, you do have crude. That could be interesting if you're trading energy right now like I am. You also have the 10-year note auction. I think that'll be interesting to see how that plays out, as we've seen yields kind of going a little bit higher here recently. And then looking at Thursday, the big one for the week, headline and core CPI expected to be just a little bit lower in terms of core from the previous read. And then looking at the headline numbers, actually a step up on the month over month for the headline, as well as the year over year numbers. So core expected to go down, headline numbers expected to go up. Fed balance sheet, always interesting, as well as the federal budget. And then looking at Friday, we do have PPI, which will also affect markets, looking at inflation going forward. Right now, the market is expecting cuts, and if these inflation numbers come in a little bit hot, we are not likely to see those cuts early this year. Moving over to Max Pain for the end of this week. You can see Max Pain 471, current stock price a little bit below that, so showing a little bit of bullish potential. Total options, very, very few, under 600,000, so not going to have a major impact on markets. Put call ratio 1.1, put wall 465, call wall 476, the same as it was this week. So you would expect to finish between those two levels. Does give you a little bit of bullish potential to get above that 470 level up to Max Pain, just about 0.5% of bullish potential. But again, don't put a huge amount of weight on this, as the total options are very few. Moving over to the charts, starting off with the S&Ps here on the weekly chart. Sure enough, we did get weakness, down 1.5% on the S&Ps, but the bigger note here is we did see a step down on momentum. The weekly chart does not have a bunch of resurgences on momentum, so usually this ticks all the way down to that midline, even if we're going to see a couple of weeks of rally there. So down to the midpoint would give you a couple of weeks of downside potential. What that looks like, obviously that remains to be seen, but right now you should expect more weakness for the next few weeks. And if we get a full follow through like we did here in August of 23, you got that first week of step down, and then you got 1, 2, 3, 4, 5, 6, 7 weeks of downside potential going forward. And another example here, your first step down on July of last year, first step down, 7, 8, 9, 10, 11, 12 weeks of downside movement, which culminated in about a 10.5% down move. So pretty substantial. You did have a couple of pullbacks in there, but overall that was a substantial down move. And if we did see something like that, from current levels, that would bring us all the way down to the 55 EMA and the 144 EMA on the weekly chart, which would put you back in that 4250 range, which absolutely does seem possible. In the shorter term, I wouldn't expect to bounce before the 9 EMA, which is down at 4625, and then you have the 21 sitting at 4465 and some trend support in here at 4543. Moving over to the daily chart, you can see I have been watching for a head and shoulders. We did overthrow my neckline just a little bit here to that support level at 467. I expect a little bit of a pullback, could be a little bit lower right shoulder up to that 9 EMA, currently sitting at 472. If it pulls down a little bit more, maybe 470, could just be this shorter term resistance at 471. That was max pain as well. It's worth noting I'm expecting this right shoulder to take a little bit longer, potentially into that third week of January, so do keep that in mind. But right now this is my trajectory. In terms of levels, like I said, 476. Above that you got 470, 80, and then to the downside, if it breaks, currently 463 would be your support, and to the upside you have 474. I don't expect to get that high, especially with max pain and that resistance in that 467 area, as well as the major trend lines in that zone. If we do get here, I expect clear rejection, and realistically, I don't expect to get that high. Moving over to the NASDAQ on the weekly chart, again, a big down day. We had the doji 2 weeks ago, and then last week we had a 3.09% down move. I think the NASDAQ was even more, around 3.12. So this is the actual index. The Qs were down more. And you can see that here, we're almost to the 9 EMA, that's sitting at 16,218, and we're just above it here at 16,305. You can see we're sitting right on top of the highs from November of 21. Again, we did see a step down in momentum. This could take a while on the weekly chart, and if we do see a bigger move like we have before, that could be all the way up to 11% down from its peaks. We're already about 3% down, so that would be another 7% from current levels. And if we did get a move like that would bring us down to the 15,150 area and these peaks here from October of 23, as well as the peaks here from March of 22. Again, that would be a substantial move, definitely something that you would want to avoid. And it is worth noting, you can see some pretty substantial moves for several weeks once you get that first step down on momentum. This is one of my favorite indicators for that reason. Gives you that initial move. I was expecting it coming off of the doji, but sure enough, it does look weak. You might find a little bit of support, and we'll take a look at the levels on the Qs. Moving over to the Qs, you can see that most recent fall. We had 5 days in a row of negative price action. Friday was slightly positive, but basically flat after throwing some wicks to the upside. Momentum still bearish, RSI still bearish. We didn't quite get to these wick highs like I thought we would, down at 393.44, which could be showing a little bullishness. We did talk about it in the Thursday and the Friday video. We did start to see a little bit of bullishness on the shorter time frames. And I do expect that to follow through at least to a lower high, and then we get that bigger sell-off like I've been talking about on the longer time frames. And just to give you that perspective, you can see this was falling for all of those days, and then on the Friday session we did wick some lows And you can see the momentum of this was fading here. RSI starting to show some strength. This is the hourly chart. And then we got all the way up to that 55 EMA. We're still holding the 21 EMA. So shorter time frames looking for a bit of a rally, potentially up to the 144 EMA, sitting up around that 405 area. So do keep that in mind. Everything on the longer charts, dailies and weeklies, look bearish, but on the hourlies, we are starting to see just a little bit of potential for a pullback to the upside. Moving over to the Russell, this is the monthly chart. I wanted to highlight this interaction that we had here at the beginning of November at this trend line. That's a very important trend line, and I did not address it. That goes back here to the lows from October, the peaks of 2011, and then the peaks here in January of 19. And then if you go all the way back, that trend line does mark the bottom here in November of 1990. So very important trend line. If you don't have a chart like this, it's definitely worthwhile putting these longer term trend lines on there. Marked that bottom perfectly, and it is worth noting that monthly momentum here on the Russell is still bullish. We are still expecting some bullishness for the Russell, but jumping down to the weekly chart, you can see it is the same as all of the other ones. 2 bearish weeks in a row, expecting more downside back into that 1888 area. Momentum, bearish RSI, pushing back to the SMA. Might find some support there down around that 50 line, but right now everything does look weak. And if we do get a full follow through, this could push all the way down to trend around that 1700 area, which would be quite bearish. Moving over to the daily chart, you can see those down days in a row. Even the Friday session was slightly bearish at 0.29%, momentum bearish, RSI right at the 50 line. So this still to me says that it could go lower. Your support line is 191.38. Your resistance is 195.15. If either of those break, it could give you some directional bias. Right now, still looks bearish. Looking at the hourly chart here, you can see that same thesis that we talked about on the NASDAQ starting to show a little bit of a curl up. 9 and 21 EMAs on the hourly chart have consolidated, waiting for a bigger push to that 195 and the 55 EMA on the hourly chart. RSI looks okay, momentum slightly bullish. Moving over to the Dow on the weekly chart, you can see we were still at all-time highs. We did wick it on this candle, but ended up bearish on the week, 0.59. Very small down move in comparison to the other major indices, but still a down move, momentum stepping down, and you can see just how high we got on this indicator. Very, very high. We did get into that same range in November of 22, and that ended up being a pretty substantial pullback from those highs of about almost 9% to the downside. So if we do get a move like that, that would be quite substantial. 8.5 to 9% would put us all the way down to the 55 EMA at 342. So again, would be a very substantial down move. We're also overbought here on the weekly chart on the RSI. And last time we hit overbought conditions, we did continue higher for a little bit before seeing a full year of downside movement. So something to pay attention to. And then looking at the daily chart, again, it kind of looks like the inverse of the shorter time frames. We were rallying aggressively, started to fade, and now we've kind of rolled over here. 21 EMA sitting at 371.82. The levels up here are a little bit more sparse because this is price discovery for the Dow, so it's a little bit more challenging. Current support 373.74. Current resistance 376.35. If the 21 breaks, then you're watching 396.50. Momentum bearish, RSI looking weak below the SMA. Looks like it's set to move lower, and you can see volume picking up at this extended high. Looks like a consolidation waiting for a bigger breakdown in my opinion. Moving over to the equal weighted S&Ps, we did get a down week here as well. 1.3% down, momentum rolled over one tick. Volume stepped up from the previous week on the down move. And you can see this trend line here from the lows going back to October of 22, marked the lows here in May of 23. Marked a little bit of consolidation in September of 23 as well, and then marked these most recent highs, broke down from that level. We're still in this consolidation of this most recent high at 158.50 and the most recent low here at 154.78, so still technically consolidating. It is below my 155.79 level, and I would expect it to pull back at least to the 9 EMA here, 151.24. Whether it does it all in 1 week remains to be seen, but that would be my initial price target to the downside. If we pull back further, you got the 144 down at 148.23. My level above that is 149.82. So a couple of levels in here, potential for support. Then looking at the daily chart, you can see that consolidation that I talked about. Currently holding that 21 EMA, but it's stuck between the 21 and 9 EMAs. Momentum bearish, RSI breaking down. You can see volume starting to accelerate on that down move. We did see a slight bullish move on Friday, 0.29%. Go ahead and look at that on the hourly chart. So we moved lower, tested the 200 SMA, overthrew it to that most recent support that you can see here in the pre-market. And then we ended up rallying from that level. It's above the 200 once again. So short-term bullish, waiting for a break above that 155.79 level. If that breaks, you can look for a move up to the 144 on the hourly at 156.89. That is a lot of levels to pay attention to here. So definitely pause the video and put these levels onto your charts if you need them. But like I said, medium-term bearish, short-term bullish. Moving over to the ratios, starting with copper divided by gold. I don't talk about this one every week, but it is worth noting. Over the last 3 weeks, we've had a pretty substantial down move. 3 weeks in a row of bearish price action, closed at the low at 18.56. Next support for me, 18.3. Momentum rolling over, RSI broke below the SMA, volume accelerating. When copper is declining versus gold, that typically means economic productivity is declining, and that is what we're seeing here, and that's typically bearish for markets. So do keep that in mind. Copper is weak versus gold right now. Moving over to SPY, Russell, and NASDAQ SPY, you can see the SPY has been outperforming 2 weeks in a row versus the Russell. Momentum ticked towards bullish, RSI looking to get above that 50 line. It's right at it right now, so Russell looking to underperform going forward. Saw a couple of weeks of outperformance. Now it looks a little bit weaker. Resistance at 2.42, got the 21 EMA at 2.44, so we'll see if it overthrows that. I would expect that it will based on this momentum histogram. And then looking at NASDAQ SPY, like I mentioned last week, NASDAQ is underperforming the SPY. We hit resistance, had a bearish candle, had another bearish candle on the week. Still holding that 21 EMA, so the trend is still technically bullish, but look at that big bearish momentum on this ratio. Big step down, RSI breaking down pretty significantly. Does seem like the SPY is going to outperform in the short term versus these two major indices. Moving over to SPY divided by the M2 money supply, you can see that bearish candle 1.52 to the downside, 9 EMA sitting at 222. Major support at 22.05. If that level breaks, I do expect quite a bit more downside to come. Momentum bearish, RSI. Significant divergence here. You can see we hit overbought conditions on the 24 July candle, and then we got much higher prices here, but we did not hit overbought conditions on that most recent rally. So quite a bit of divergence between the July and December peaks. Now we're rolling over significantly. If we see a pullback like we did here, you're looking at the 55 EMA all the way down at 2052, right above my level at 2050. That would be a pretty significant down move, giving you a potential of about 8.75% downside. Moving over to Boeing on the weekly chart. Boeing had a massive run from 177.55 all the way up to its most recent peaks at 266, almost $100 of movement, or about a 48% run going from its lows in October to its peaks here in December. So massive run for Boeing. I wasn't really paying attention to this. Maybe I should have been. Very clean, but now you can see 2 weeks consolidation, and then we got a down week, 4.47 to the downside. Didn't quite hit that 9 EMA. You would expect it to at 237.50. I do have that most recent support line here. Wicked it at the touched it here at the end of July. You would expect to touch again here at 240.81. And then looking at the daily chart, you can see a similar move to what we've been seeing across markets. Massive rally, consolidation, broke down, looking to retest the 9 and 21 EMAs. Momentum ticking towards bullish, RSI ticking towards bullish. So you're seeing a little bit of bullishness in the shorter time frames. But on the weekly, we saw extension. On the daily, we're seeing extension. And you would expect this to pull back a little bit more, in my opinion. Moving over to Apple and Tesla. Apple had a big down week, 5.9% to the downside, took out the 921 and VWAP here on the weekly chart. Let's go ahead and extend that trend line out as we might be hitting it here pretty soon. On the next candle, it is sitting at 177.48, just behind my level at 178.58, and that highly traded zone all in the same area. I would expect some follow through to that zone. Momentum continues to roll over on the weekly chart. Let's look at that on the daily just for a moment. We are at the 200, which is an important level. So you could argue for a little bit of support there. If it breaks, however, I would definitely look for that bigger down move. Momentum bearish. We are oversold on the daily chart, which is interesting. And then looking at the hourly, basically sideways chop on the Friday session, selling off a little bit after hours. So Apple looks a little bit weaker than the major indices. And then looking at Tesla here, we did have another big bearish week, 4.42% after wicking that 264 level. Talked about that being the price target. Sure did touch it, and then we pulled back this week. right to that short-term support. We're right on top of it. You can see that on the daily chart. That consolidation broke out, failed after touching that level. Right at that level now, momentum bearish, RSI bearish. If it does hold this support, that's something to trade off of. Maybe look for a test of the 9 EMA at 248, but right now this does look quite bearish with the breakout, failure, breakdown, and it does seem to be holding some short-term support. I would expect those to break ultimately. Moving over to Amazon and Netflix, I wanted to highlight these here. Amazon had a big bearish week as well, 4.41% momentum rolling over. VWAP sitting down at 140.84. Got the 200 SMA sitting at 138.93. Would expect to move into that zone at least. We're well below the 9-week moving average. And candles like this typically have at least some follow through. Let's look at that on the daily chart just for a moment. It is at that 55 EMA. Didn't quite touch it. It's at my 145.55 level as resistance. Momentum bearish, RSI bearish. So at least a move down to that 143 area. You can see that is the bottom of this consolidation here recently as well. And then looking at Netflix, this was one of the better performers of the Mag 7. 2.63 to the downside on the week. Had a doji, touched the 9 EMA, ended up holding that as well as this shorter term trend here from the lows in August. Touched it again here in December and then touched it one more time here. If that level breaks, then you're looking for a pretty significant move down to the 21 EMA at 431.33. Let's look at that on the daily. Definitely fading in terms of strength. You can see we were super overbought going into this November peak, pulled back into December, rallied up, made a much higher high, much weaker RSI number, and I would expect this to continue to break down here. Looking for a test of 455.91 this week. Moving over to staples and discretionaries, both down weeks, but staples was 0.03, whereas discretionaries was 3.46 to the downside. We were watching the short-term consolidation, gapped through that level, broke down right to the 9 EMA at 171.35 and that highly traded zone. Next level for me, 170.68. Momentum rolling over, RSI rolling over, same thesis. Momentum on staples continues to build. I would expect some more follow through to the upside. The structure is still intact in the shorter time frames. Just hit the 144 and 55 EMAs as well as my 72.50 level. Looking at that on the daily chart, you can see we're also at that 200 SMA, pulled back to the 9. As long as you continue to hold support here, it should look okay. This is a melt up. You can see momentum very small, continuing to make higher highs. This was a higher peak from this previous high. And if we hold here, this would be a higher low from this previous low as well. So everything looks okay there on staples, whereas discretionary is massive breakdown. Looking at the daily chart, again, on Friday, did find a little bit of strength, but momentum bearish, RSI bearish. Even if we saw a short-term rally, I would expect to get to around that 21 EMA at 176.87, find rejection there, and then start to sell off once again. Moving over to oil and gas and energy, you can see momentum on both of these continues to tick towards bullish. Got another step in that same direction this week. Wasn't as big as I would have wanted to see, and oil actually had a negative week, 0.23 to the downside, so not great there. Oil looks a little bit weaker than energy. Energy was positive on the week, 1%, so you like to see that, and I do expect follow through. We did touch that 21-week moving average on energy at 86.95. That was a critical point. Touched it, pulled back, couldn't overthrow to my level at 87.37, but bullish candle, volume stepping up. Energy looks a little bit better going into next week. That's why I held into the end of the week, rolled out to next week. I do like energy. Oil and gas, I could argue this is bullish off of that 55 EMA at 135.85, and really both of these are a better place to be than major markets right now. Everything has been falling pretty aggressively, whereas energy did turn a profit on the week. Moving over to breadth, we talked about it a little bit in the Friday session. If the 20-day is going to hold at this 51.75 level, it needs to do it now. See a short-term bounce, expect sellers to come in, then we'll see that continue to the downside. Just a little extended with that massive down candle on Wednesday. And then looking at the 50-day average, we did start to see a little bit of a rollover. We're still holding that 21 EMA, but look at this on the weekly chart. You can see we've had 3 candles in a row, basically in the same vicinity. We're starting to break down after touching that 92.25 level. Momentum continues to roll over, and I do expect this to go lower. How it does it obviously remains to be seen, but when it happens, usually we see pretty significant down moves back into the more normalized range, 52.81, potentially all the way down to 32, and that would be very bearish for markets. looking at those price targets that we talked about in that 8 3/4 range for potential downside. Moving over to the 200-day average just for a moment. Momentum still bearish, RSI still bearish. Let's look at it on the weekly chart. Continues to throw wicks at resistance at that 76.04 level, right at these previous peaks as well. Hasn't been able to get above it, and we did finally see a step down on momentum on this candle. First one we've seen in a while. We'd been rallying since the 30 October candle. Now we finally saw a step down. Could take a couple of weeks to kind of get going, but usually eventually we see a bigger move down. You can see here, big rally, step down. Saw 2 candles in a row of bearish price action. Then we saw a higher peak, but momentum stayed weak, so we knew that was going to fake out. And then we eventually pulled back to a lower low on this ratio into that bearish momentum. So eventually it does follow through, just depends on how it does it, something to watch for with that first step down. Moving over to yields, we talked about the 2-year being flat and the 10-year rallying in the Friday session on the Friday video. And it does seem like this is going to rally a little bit more. It is at a trend line. Didn't quite get there. Might overthrow it. We're above the 9 and 21 EMAs. Bullish momentum, bullish RSI. You expect this to go higher based on the technicals. And then we have that 10-year note auction that we talked about on the economic calendar. Something to watch for. Does kind of seem like we're looking at the yield curve potentially going back into positive territory. And we're actually pretty close. Got the 2-year sitting at about 4 1/3, and then you got the 10-year sitting almost just above 4%. If this continues to tick higher towards that 4 1/3, 4.35 area at the 55 EMA, we could see a yield curve go back into positive territory. Depending on how far it goes, could be interesting, but typically once you get that reversion, that's when we start to see those recessionary environments start to roll in. So something to pay attention to. 10-year definitely rolling higher, 2-year staying flat in this zone. Moving over to the put call ratio, we did see a wick up to my 1.4 level. So that is my first indicator, starting to see a little bit of oversold conditions. It's not the major one. That's up at that 2.01 area. You can see we hit that here in December of 22, touched it again in January of 23. Haven't been there in a while before that, going all the way back to March of 20, which was the COVID lows. Hit those areas, and then we saw a massive pullback. Big bullish rally through that next year, and now we hit oversold conditions. So something to pay attention to. Hit that first indicator, pulled back from there a little bit. Might be looking for some bullishness off of that indicator. Moving over to the dollar, you can see on the hourly chart, this was the reaction to the jobs data. It was basically flat after throwing a wick to both sides. I was pretty surprised about that. I thought that data would be enough to push the dollar higher. Didn't quite do it. And then looking at the weekly chart here, you can see momentum got a tick towards bullish. First one we've seen in a while. We have been rolling over into that bearish territory, tick towards bullish, could be looking for some bigger moves up to that 104 area at the 21 EMA, sitting in that same zone. Almost hit the 9 EMA, pulled back from it a little bit, but right now this looks quite bullish with that step down. Doesn't mean that we can't throw a wick to the downside before going higher, but to me the dollar does seem like it's set up for a little bit of a rally over the next few weeks. Moving over to bonds, getting a little bit repetitive here, but we did see a step down on the weekly charts on both of these. Does look like a blow off top, big pin bar, rejection last week on both of these, gap down, fell on both of these. Does look quite weak. 93.67 did hold on J&K. 9 EMA sitting down at 93.10. You would expect at least a follow through to the 9 EMA at a minimum. Similarly here on TLT, that's sitting at 94.24, just below my trend line here. I would expect to move into that zone at least. Been talking about this looking weak at the 55-week moving average for a while. Then looking at that on the daily chart, you can see consolidation started to break down. Took out all of those shorter term EMAs, momentum bearish, RSI bearish, bonds looking weak as yields look stronger. Moving over to volatility, move index sold off quite a lot, surprisingly. Momentum bearish, RSI bearish, so volatility in bonds looks a little bit weak. I would expect that to spike up with the price action that we're seeing. And then looking at the VIX, we did see a test of that trend line, broke down from that level. It is at a support area. Could find support here and then rally higher, but based on that candle, you would expect at least some follow through to the downside like we saw here. Big bearish candle, retested, 2 candles in a row of bearishness, got all the way back down to that 12.3 area. If we saw a move like that, that would give you that right shoulder that I've been talking about, potentially potentially showing that short-term bullishness coming through. Certainly possible, but even still, if we get that move down, this structure is starting to show a potential for a bigger spike. Whether it's going to be a spike like this, where we get all the way up to that 22 area, that remains to be seen. But this is definitely showing some structure. Moving over to my accounts, I am up to 112,000. I did add my money here for the Roth IRA for 2024, so that's 7,000 for this year. So that's nice to see. Gives me a little bit more flexibility, a little bit more buying power going into the Monday session. On the week, I was still down about 850 or 0.8% or so, which is okay. The Qs were down more than 3% on the week, so didn't participate in most of that down move, which is good. And then looking at individual positions, I still have my covered call here on the IWM down at 187 for almost $10 credit, so it gives me lots of flexibility in both directions. If we see a slight rally, I'm still covered all the way up to almost 197, and then if we see some pullback, I'll still be okay. And then looking at the Qs, still have my shares covered call down at 395, so that's in the money for $9 credit. Max profit there up around 404. And then if we do get above 397.28, I'll look to purchase some shares to turn this into a covered call for 20 days from now at $7 credit, again, right in that 404 range. And then I do have a short dated put here for 88 cents at 396. And the Qs were actually up a little bit after hours. And then my XLE position, I said I'm bullish on energy, 185.5 put for $1.40 credit, looking for some bullishness going into next week. So overall positioned slightly bullish with some decent protection. And then moving over to my profit graph, you can see I am a little bit biased to the bull side, willing to adjust these puts into some shares if we see a little bit of a rally. And that is kind of what I'm expecting. My trigger for that is the strike for those calls, which are currently sitting at 397.28. So if we get above that level, I'll look to buy some shares. I do have those puts on as well to help cover some potential losses on those calls as we rally if it happens. And then if we break to the downside, I'll take off those puts and then I'll have the calls to protect my share position. And then I can look to take off those shares if I have to as well, if it gets a little bit too ugly. But right now, slight bullish bias, and those are my potential adjustments. Let me know down in the comments section if you agree with iShares or if you have any potential trades coming out of their thesis or your thesis based on those same principles. Also, let me know what you think about Boeing. Are they going to get back on track, or is this a company that just can't get out of their way and they're going to see more selling on their share price? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.